a fresh leg higher over the last 5 minutes or so of trade. Abhiram Eleswarapu is head of India equity at BNP Paribas India. Abhiram, good to have you with us here. Thanks very much for your time. I mean, large stock moves, based on news or otherwise. I don't know if you have coverage on trend, Abhiram, or if you can comment, and if you looked at the numbers, etc. Stock's not cheap, depending on what estimates you look at. On F525, it trades anywhere between 80 to 100 times earnings. Any thoughts?
Yeah. Thank you for having me, Prashant. Unfortunately, we do not have coverage of the name, but I was just looking at some of the numbers being reported by consumers overall. And when you do have one or two companies surprise positively, I think valuation is obviously the second consideration after that. Once companies have reported good, strong growth, they form an exclusive club in the sense that, by and large, if you see this entire result season, the overall consumer pack is disappointed. So I'm not surprised if you see one or two stocks, shoot up because the results are good.
Abhiram, the bet that you had spoken about earlier is Affluent India. So what would come under that category? Any new additions that you would like to talk about?
In terms of Affluent India, to be fair, that theme has been playing out even now. So, I recall talking about this a couple of years ago when our research team put out this report. But since then, actually, more categories have been coming in. The original, thought was that investors should consider, four-wheelers and jewelry and more consumer-oriented names. But since then, if you see the basket of what Affluent India consumes, it's expanded. For example, insurance is one of those. Financial products, by and large, fit that bill. And so, therefore, I think overall the basket has expanded to beyond consumers to include financials overall, and maybe even consumer-oriented tech names and so on and so forth. So, overall, I think that theme is here to stay.
Could you elaborate a little bit more on these consumer-oriented tech names which fall in this basket?
Well, I'll have to say that overall, bear in mind that there's a lot of new IPOs coming in, a lot of new companies have come to the market. I won't go into the specifics of these, but if you see this come across the board, starting from financials to consumer, to jewelry, to online oriented companies and so on, all of these are now part of that basket.
Okay, so that's as far as consumption is concerned. Abhiram, good to have you on the show this afternoon. What thought on financials, given all the volatility that's taking shape? On one hand, there's obviously this issue of margins and the fight for deposits with large banks. How have you read all the commentary that we've got at the end of Q3, and what are you doing here?
Well, I think that a couple of things to bear in mind. First is I think the story around margin pressures is largely gone, at least at the NIM level. So that's really not the concern for investors. I think what the focus now is on continued growth rate, and I think that is still pretty strong across the board, you would have to say. But what investors are now kind of considering is credit cost normalizing. I mean, they've been low for a while. And some banks that did report results recently have talked about that starting to pick up a little bit. So maybe that's getting into the estimates from here on. But if you see the third factor, which is valuations, they're still quite favorable across the board. I mean, financials haven't performed very well, at least the large banks and the large cap financials overall. So I think that there is still quite a lot of value. And so I think that given that there's not a whole lot in the market where you can find value, investors will probably start looking at financials a bit more deeply from now on.
Public, private, and you're talking about private ones, Abhiram?
Well, private ones, obviously, at the end of the day, they do form a significant portion of the index. And the index as a whole having to move up also entails private banks being part of that. That said, if you see PSU results across this season, they've also been quite heartening, to be honest. So, it's not just a call about private versus public, but more a bottom-up call about which companies have been able to beat estimates and where are valuations more favorable.
So which ones are you pushing, Abhiram? People will be perfectly owning things which don't push up the index as long as those stocks go up. It doesn't matter.
Yeah, no,
so what are you pushing?
That's quite true. That we've been talking for a while about. Of course, we did say about financials even the last time we were here, but I still think that there is quite a lot of value in the large cap banks. They haven't really performed as much as I would have expected them to, and so I think if I had to really put my my eggs in a particular basket, it'd probably be large private banks, just for the fact that they haven't performed. And I frankly think that the difference in fundamentals between those that have performed and that have not performed is not as much as the market thinks.
And you're saying investors are no longer very worried about margin compression on these large banks from here on?
No, I think at the NIM level, probably the concern is maybe for one more quarter, but that's kind of been well flagged by banks also. So I don't think that is really the issue. The concern is really about, see, at the end of the day, when a sector has not performed, people will obviously have a lot of questions to ask. But I think that once stocks start to move up, and I guess that'll happen with further results that come, and then the story starts to become a little bit more, fulfilling in that sense.
Okay. And Abhiram, non-banks, what do you like at the moment? Non-bank financials.
Non-bank financials, overall, the larger names, and to be fair, many of them have actually done quite well, but we think that there is still more juice because overall demand for credit is quite strong still. And we've not really seen any major issues around credit quality and so on. So I think overall, diversified financials is a place that we still continue to like. And amongst them, our usual preference is for the larger names, because it's probably a little easier to analyze those and kind of spot any red flags and so on and so forth. So overall but kind of expanding that argument a little bit more, over from a long-term perspective, we still like the insurance theme and more private insurance here, because not only is that sector kind of consolidating towards the top one or two players, but more so that it very much fits the affluent theme that we mentioned earlier.
You were also bullish on defense and railways, if I remember correctly, in the entire capex theme. Are you still riding it? Because from the last time we've spoken, stocks have only gone up.
Yeah, when stocks start to go up, you start to get a bit more concerned about how much of juice is still left. So if I take the overall capex theme and the basket, I think where really there seems to be more juice left, it's probably on the power side, maybe the transmission side. Those are the areas where obviously there is a lot of thrust from a long-term perspective by the government, by private companies and so on. And that seems to be at the margin, the place to be within the overall capex area.
All right, Abhiram, we'll leave it there. It's a pleasure having you with us here. Appreciate you joining in and running us through what you make of things right now. The markets is like a traffic light. Blinking red and green, nothing at all. 21,930 is what you have on the index. We'll take a quick commercial break here. Nimesh gets us D Street chatter, what he's picking up, and of course our technical trading ideas in a bit from now. After that, stay with us.